Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, surprise. Look at net interest margin. We just got these figures in. This is for our national benchmark of all community banks across the nation. And much to my surprise, because as we looked at last year, the expectation last year was net interest margins to compress in here because of interest rates remaining doggedly low, and many banks experiencing margin compression. Yet the national average is not showing this until the first quarter of this year. In fact, we saw a rise in net interest margin this past year, and then we started to see a decline in the first quarter, declining 9 basis points in net interest margin, and it was like, aha, that finally that margin compression seemed to appear. But here we go into the second quarter, interestingly enough, up 8 basis points, almost completely reviving what we had during the first quarter into the second quarter. So when we think about that, is that what's going on? Is there ability to cut cost of funds more? Yes, they were down slightly, but the surprising piece in here is look at the trend in yield on earning assets, heading down in the first quarter and then starting to rise again in the second quarter. So what is happening there? Some bankers say, well, banks, when they're basically bringing back non-performing loans, they're able to bring back accrued interest. That may be a factor from what we went through, because we've seen those non-current loans continue to decline in here. But what's interesting and sort of goes against what a lot of bankers feel is the trend out there is actually growth. So when we look at the last 12 months growth rate, you'll see that loans grew 8.81%, which is fairly stellar growth compared to the overall level of GDP that we're seeing in the country. But what they're doing is growing loans faster than deposits. Deposits only up 6.36%, and most likely what that is doing is to boost up overall net interest margins. So when we look at it, is that the community banking industry on average is managing their way through this period of low interest rates, and that they're actually seeing the net interest margin increasing. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.